Early to bed, early to rise, work like hell and advertise. That's what they say. We haven't figured out the advertising part yet, but we know how to work our asses off. We're on the road. The sun, it's not up yet, but we are. We're getting out on the road today. We're gonna kick down some doors. We're gonna immerse ourselves in the process. When you get on properties, when you go out there, you get on the open road and you hit some deals, you find things that you're not gonna see from an offering memorandum, and that's what we're all about today. We're gonna get out there, we're gonna find something, and we're gonna drum up some business. See you in a few. Back on the open road today, you know what we love. We love getting on site and looking at deals because you never know what you're gonna find. You know, we found a deal a few weeks ago. Wasn't too sure when we were looking at the offering memorandum, but when we got on site, we saw the businesses that were in the area, we saw what was going on, we saw that it was true mom and pop, and then we were able to then go and drive the comps in the area to really see what the future upside is. So, D-Dog, what do we got today? You got another one.
Man, well, let's just walk through what this week looked like. You know, we had plans on coming out here. I'd say about a week ago, we found a property that looks really good. That's gonna be the first one we check out today. It's kind of your mom and pop type owner. It's in a little sub-market, a little pocket that's about 40 minutes outside of the main city. So we need to check out the area, most importantly, because the numbers make sense. You're getting it at a good cap rate. You know, the upside is there. It's below market rents. It's probably just an owner that hasn't really been paying attention to where the market rents have been going. And we're going to go in and check it out. But the biggest thing that we're really looking at is the market to make sure that it supports growth. There's jobs nearby. It's good quality living for the tenants, and I think that's going to make all the difference on this one. So we found that deal. We set this deal up, but we don't want to go anywhere and drive 3-4 hours just to look at one deal. So I spend Monday and Tuesday of this week just working with all the brokers in the local markets and drumming up deals. Eventually we had 5 deals planned. We don't have time for 5 deals today. We're gonna have to come back to some next week, but we're gonna walk three deals today, and we're gonna get on site and we'll see how everything plays out. But no matter what, the more deals you're walking, the more you're gonna learn the market, the more you're gonna get more information from 3 different brokers, 3 different sources and voices that are gonna share with you, what the upside is. So really excited about that.
A few more things too. I think deal flow is the name of the game. The more deals we look at, the better opportunity we have to close. And also, I want to again, like I said, get into some of the competitors. I want to walk some comps in the area, see what they're charging. The great thing is we'll be able to check the comps real time on our phone, what they're charging, walk them, see the quality of the assets, and then it's time to take a minute and enjoy some local cuisine. Right? We'll see what the good fare is in the area.
Late lunch, like maybe 3 o'clock lunch.
He's really busting my balls right now. I want to get into like 11 o'clock and get something to eat. We got up early, but I didn't get up as early as this guy got up. So I want to introduce a new family member. We got Rashad here heading up the brokerage, principal broker. And Rashad, tell us a little bit about what you bring to the table in the future of Rand Multifamily.
Well, what I plan to bring to the table is determination, hard work. I'm real big on that vertical integration that you all are big on too. Bringing everything in house, getting our own brokerage. I'm also excited about going up here today, checking out these 3 deals. You actually got to put feet to the pavement and actually walk them. So, we got a big day ahead of us, and I'm just excited, man.
So, we got the investment arm, we got the education arm, we got the management arm, we got the construction, we got the deal dog arm.
We got the deal dog arm.
We got the deal flow. We got the syndication. So we're bringing it all in house, kicking down doors, making it happen. More to come. A little nervous coming out here. Not a whole lot, but we're seeing good signs. We're seeing the home of Buffalo Trace. We got Chicky Flicky. We got Panera, and we got Starbucks.
And it's a state capital, right? So these are things that we're going to look for, right? We got good bourbon, good places to eat, and then some government jobs. Right. So yeah, I think we're looking pretty good so far.
The ride out was a little discouraging, but we're picking up. And we got Kroger. That's like the trifecta.
Man.
Kroger, Chick-fil-A.
Kroger's our lucky sign, man.
Kroger is the lucky sign. I'm not sure about that Kroger sign though. That hasn't been updated since the 80s, so I'm getting a little nervous.
I've never seen one that looks like that.
So, yeah. But it might be okay. Applebee's, Johnny Carino's. All right, we'll see here. And there's a
steakhouse.
Longhorn Steakhouse. Okay. All right. You got Walgreens.
Yeah, that's good.
J.C. Penney's. You got a fake.
This is a
mall.
pretty good area. How far out are we? We're 2 miles out. That's not bad.
Not bad.
Where's the Starbucks at?
No, I was just thinking. I'll tell you where's the Starbucks.
I think we saw a sign. I think we saw a sign, man.
Oh, it's right here. All right, so we get the Starbucks.
Nice.
It's half the size of a normal Starbucks.
Starbucks, 1.5 miles out.
So that is a good sign. Oh, we got a university? Okay. Oh, this is encouraging. Though.
No, it doesn't look bad.
Oh, now we're getting to the Cricket Wireless. Here comes the pawn shop next.
That's always a bad. Yeah,
you don't want to see Cricket Wireless.
Hate the Cricket Wireless, man.
No, hang in there, man. We got 1.3
No
miles.
pawn shops, no strip clubs.
No pawn shops, no strip clubs, man. That's all we're asking for. Yeah, you got the payday loans, Tax Express, and Cricket. That's what we don't want to see.
Payday loans.
And the King Donuts that went out of business.
All right, so we got
roof issues.
Roof issues.
We got roof issues.
We're like, pretty nice looking place overall. I like the brick. Taking care of the yard, for sure.
We got a little overgrowth here. We could use some better landscaping. Definitely need some parking lot.
Yeah, some power wash.
This is where the landscaping falls, though.
Yeah.
You definitely have overgrowth. This is the stuff that drives me nuts, man. You're not taking care of it. Parking lots look like shit.
Yeah, they do.
But this is opportunity, Uncle Sean, right here. This is the growth of opportunity right here because people are not taking
Growing
care
out of the ground.
You got weeds taking over, all right? This is not a dystopian movie here or something where the world's coming to an end. This is real. Man, these parking lots are shit.
Yeah, they are.
There's your mansard roof. I wonder why they're promoting weeds taking over everything here.
I mean, it's
landscaping is shit, man. That's not helping them out at all. Yeah, roof and parking lot issues up the ass. And this is the other piece here. We got some probably bed bug issues going on right now.
There's no cars in there either. You see the main office?
Not yet. Okay, maybe it's just a normal treatment from the Black Diamond.
Pest control.
Yeah, it's good that they got it, really, right? Yeah. All right, so not loving this either. We got window units in one of the mansard roofs. It may just be that building though. Yeah, these roofs.
We must have built that thing first.
So this is CapEx though, because you got roof, and the landscaping can be fixed.
Mm-hmm.
You got the Bon Jovi crew hanging out here, just trading cigarettes to each other. All right, what? You know where the leasing office is? You see any signs?
No, I missed.
Yeah, I mean you got a lot of it's
office.
Oh,
you said 900 something.
980.
980.
This is your 30 door mark, you know.
This might be 25. You wanna just call him, tell him we're at the top of the hill and we're looking for him.
It's decent size. No. Look at the kitchen now. You got the old school stove. I guess you can live with it, but it's not ideal. Yeah, it's tiny. Rashad's can fit in this spot.
It's kind of the middle, right? Like these guys take good care of it, the people behind us don't, and these are sort of in betweeners. So this is not any. the last time the gutters were cleaned out on the Sean? There's some cool stuff. It's just, you know, when you don't keep it up on the day-to-day, you end up with this.
Well, it's what you said. It's just that there's a lot of renovation to justify the amount of renovation for the amount of upside doesn't seem to work out.
This is a classic here. Weeds growing out of the gutters. I've yet to buy a deal where I saw weeds growing out of the gutters. Could be a first. Just struggle. It seems like they're struggling to do like the basics. Yeah, like the. Yeah. I mean, this is not good. Right here on this corner, you put a big ass sign. You know, you move the dumpster over some, and you put leasing office, and you have it right in there.
Yeah.
And then everybody that comes in thinks that this is the spot.
Yeah, that's way better, man.
There you go, 921, the new leasing office right there.
I like it.
So it's not like, this is a great area. This is okay. It's very working class.
Look at that. They got like a water slide up there. Playground. Golf course.
Yeah, we gotta get the comps on these guys right here too.
Yeah. That'll all be in the CoStar report.
The weeds grow all over the buildings.
It's part of the Kentucky culture.
You wanted to go to Starbucks too?
I took the first one.
You already took the first one. So this is the first experience going into heavy caffeine here. Coffee is for closers. This is Doppio. This is Doppio Espresso, and he's going heavy on his first one. 280 pounds. Might not do it. We might have to go back for more. So we'll come back in a minute and see how he feels. Any last words?
It's gonna be a rough one.
You doing the whole thing? Are you supposed to say?
Yeah, you don't have to.
Let's look on the map. Like it looks like you got to the east side. It looks like it starts to get like just more money in the area overall. What do you say? And then I guess what can you tell us about like the areas in it?
So I mean, I'm still learning.
These types of restaurants don't ever seem to go out of business either. They like, you know, they always just like there. Jewelers.
Neighborhood cantina.
Every neighborhood needs one, right?
Yeah. I mean, they're in the Hispanic area, so.
I feel like if you could just do like a better presence from the outside in terms of the way, like,
Presentation,
like the way all this looks.
a better presentation.
Yeah,
exactly.
exactly. That's exactly right. Sean. Like, no, we're not doing infinity here, but like, dude, you love that. You love that. You love this. All like service-related stuff that you need. These are the types of businesses you want in here. It just doesn't. It just there's no. There's like no code, like you said. It's just all kind of like hodgepodge. So.
But then it's going to need a heavy renovation, and then we you know, if you look around, it doesn't look like that many other properties out here have been renovated like that. So,
but this is the one where people are kind of like stalling on it. They're not really.
Yeah, like the area you're saying.
No, like the offers are not coming in where they want them to, right?
It's that. No, he said that they have best and final now, and he said that he thinks they're going to get it done, but you really don't know.
That means people are like not really all the way.
Yeah, because if you really had best and final, why would they let us in when this is my first time working with them?
So doing what we do, local here, Lexington, trying some local fare. Ramsey's. What is Ramsey's known for? Open face sandwiches? I don't know. Let's go find
It's a
out.
little hole in the wall. You know, we got a great recommendation for this one. Last time we were up in Kentucky, we had the best hot chicken I've ever had in my life. So we're the bar.
He's overselling right now. He's overselling right now.
Bar set high right now. So we got to see how this plays out, man, and see if we can.
What are you expecting from this?
What do you think?
What am I expecting? Some good chicken sandwiches, some good fried chicken sandwiches.
All right, we'll see what we got. So, Ramsey's, you know?
I'm gonna go with.
What you got?
I'm gonna give it a 5.
Whoa, the objectivity comes out. He's being
5,
real.
man.
Dude, I saw you definitely had at least a 6 there. You're beating it down too much now, really?
We're giving this one a 5, man. That was a baseline Reuben.
So talk about what you had. You had the Reuben.
I've had a lot of good Reubens in my life, man. I came from an Irish family. We did a lot of corned beef, and
that's
so
what it is.
I, you know, I have a lot of
Mama's?
experience. No, it wasn't like Mama's. My grandma, you know, she cooked
She
some
was
good
back
corned
there
beef.
slicing it, right?
Didn't compare, man. Didn't compare. So
buffalo chicken sandwich. It was dripping with a little bit of hot sauce. Had the blue cheese. The cream corn was good. 7.5. Enjoyed it.
7.5.
I give it a 7. I had the fried chicken sandwich. I mean, it was good. I mean, they did their job. If I never go to another Ramsey's again, I wouldn't be mad. But if I saw another one, you know, I wouldn't overlook it. But middle of the road, 7.
Uncle Sean, can we get some audio?
Yeah, I had the hot brown. Not what I expected. It was kind of messy.
A hot brown. So think about how do you mess up a turkey ham sandwich covered in cheese, melted cheese over the whole plate with bacon on top.
I'll tell you,
it's pretty hard to mess that up.
I'll tell you how you do it. You put tomato on it. That's how you run it.
So looked at a few deals today, and I would say the first one I'm probably the most interested in. The issue with it is that it's about a 30,000 population, and I don't see much growth, and it's going to need some heavy rehab in terms of roofs, in terms of parking lots, and we just need to get home really crunch numbers to see if that's going to justify, you know, what it's going to take. So will the numbers line up? That's the big question.
What are the pros to that one?
I think the pros to it are that it's a price per door is very low, but that's all going to be relative to what we can do with the units, right?
Yeah.
We like the market because it had, you know, what we like to see. It had your Kroger, it had your Panera, had your Chick-fil-A, had your Starbucks. So those were good things. I think there's opportunities there to definitely raise the rent. Had a lot of, you know, it's a town with working class folks. What we like to do in the CB space. So it had some factories and had the good retail. So sort of had good bones, if you will, from that perspective. You know, it's gonna be a nice cash flowing deal. It's not gonna go from, you know, like 4 million and jump to 8 million overnight, you know, because you're not going to see that kind of population growth.
So a lot of this, you know, we look at this deal and, you know, with the initial asking price, it wouldn't be there. But this is, a lot of times this is what's going to happen, especially in some of the markets that have a whole lot less eyes on them or a lot less people looking into it, where over time the owner is going to have maybe the high expectations because they're maybe comping it against some of what's going on in some of the more major cities, the Louisville or Lexington, right? And in the sub-market, it's just not there. So, you know, maybe after seeing so many offers, they start to come down in price, and that's what really we're hoping for, because we need to get this in at the right price to make the numbers work. But if we can do it, it's you know, I think we'll be one of the stronger, one of the better better management properties in the
yeah.
area.
So let's talk about that. You had an A property in the market.
1A property. Yeah.
And then there was nothing in the middle. You went from an A to C minuses that were completely neglected.
Yeah.
So if you can come in and take a C, upgrade it a little bit, treat your people right, make sure lawn care is on point, make sure your roofs are on point, make sure your driveways are in order, right? We're not talking, we're talking the basics here, guys. The basics were not being achieved. So if you come in, offer good service, and achieve the basics, I think folks are gonna see that, and you're gonna be in high demand, and actually push some of the other folks in the market maybe to get their shit together.
Yep.
So, what did you not like
on that property? I think Well, you come across the risk of the tenant base. It looks like there are several evictions that we noticed. We also noticed that the economic vacancy is not quite there. We spoke with the property manager, and it seemed like it was pretty commonplace to be paying less than the agreed upon rent in their lease, and that's obviously nothing that we ever want to accept as commonplace. So the economic occupancy is not nearly what the physical is. The tenants, you might have to deal with, especially if you do increase the rents a bit, say it's maybe room for $50 or $100, in that case you might have to bring in a little bit new of a tenant base. And the biggest thing, the number one thing that really is going to affect this is that it's going to require a lot of renovations, a lot of exterior work that needs to take place to bring this to where we want it to be. And if we can't, if we have to put in $10,000 to achieve $70 rent bump per unit, then it's it's not going to be there. So that's really what it comes down to.
Yeah, you're going to have to really re-tenant it. I think the big takeaway for me was every time it seemed like we were turning around, we were going into another unit, and the story was, oh, well, this is an eviction.
Yeah.
And then the next piece to it is, well, we don't show rent-ready units.
Yeah,
and there's just a lot of things that were like literally making my skin crawl about how they were managing it. So there's a different management play in place. It's very glaring. The manager thought there was 176 units, and there's 128, and it's like, how do you whiff on 50 units? Where did they go?
That was almost a good thing, right? Because it just shows that they're not being as professional as they could be.
Come on, how do you not know how many units you're managing?
I know, it's off by over 50%.
Dylan almost fired her on the spot, and I'm like, dude, you can't
I told her, you're out of here.
And I'm like, D-Dog, you can't,
she didn't know where to go.
So we went in the corner, we talked a little bit. She was crying, but we got through it. And
we pushed through it. No, we made our life. One thing to note too on that property, we started off walking just the regular garden style units, and they were pretty nice units, decent places to live. But it made a big difference that I think at least 1/3 of the properties are these big townhouses. So they have multiple stories. Some of them even have a little basement where they can where they have the washer dryer hookup. And the townhouses just provide a much more quality living environment. People like to stay in those townhouses longer, and I think they're going to pay a whole lot more for that because it feels like a home, even though they're not paying for a down payment. But it feels like a home. They have more pride of ownership, and they're going to treat it better and be there long term, and that's going to allow us to achieve just greater rents. So that was an upside for sure.
All right, let's get to deal number 2.
Yeah.
Deal number 2 is what I like to call selling the upside when it doesn't exist.
Yeah.
So deal number 2 was a beat up 70s built brick complex, and they were renting for more than the completely renovated space across the street, and the broker was basically trying to sell us on a complex that wasn't in that area. It was a ways away, when literally the comp is directly across the street, and they're not able to achieve the rents that are desired.
And that was a recently renovated property directly across the street that was actually getting less rents than this property was, and I think it was in better shape.
Yeah. So he's saying, well, the value's there. You do this, you put it on a bridge loan and everything, and then what does that have? That becomes our problem at that point after sale, and then we got to figure it out when the model has not been proven yet. So we don't want to kind of jump into an area where we don't know, it may be there, it may not, and be kind of the first mover when you already see a guy that's repositioned something that's not able to lift up and even get what they're charging at the place that's not as nice.
Yeah.
So.
And that's what you see, because the challenge is that there are limits to how much they can build in that area. And when you're in a market like that, everyone starts to, as the supply starts to go down, everyone starts to assume that their property is worth more, and prices start to get inflated, and you really just can't buy on that, or you can't buy just it's speculation.
It's too much speculation without buying on actuals. The first deal would have been buying on actuals, 30 a door. Maybe we're up like $75 a month after we renovated. Very realistic scenario. The second place was pie in the sky.
Yeah.
Is it there? Maybe in 10 years, but we're not going to see it immediately.
Yep.
Investors are not going to see it. I'm not putting my money there.
Yeah.
So.
And it wasn't even in the area of the city that's been seeing the massive rent growth or the massive price jumps. But what happens is that they see people that are a few miles down the street starting to hit those numbers, and then they start assuming that they can use those properties to comp their own properties. So you really got to pay attention to where they're getting these comps from, and just investigate that on your own.
Yeah, what do we see? You know, buy here, pay here, Cricket Wireless. You know, all the types of retail that you want to see, right?
Yep, pay for less. Yep, all the good stuff. So
love the pawn shops. You know, we were disappointed we didn't find a strip club. You know, but you know, what are you gonna do?
it happens.
And then the third deal was something that's coming on market. You know, they can't even get the financing on it yet, so it's not there. And it was just kind of a review. Got to sit down, talk about what's kind of going on in the market, where we think the opportunity is. And it was just a good overview, and we got some education, but that was about it for the day.
Yeah, I think no matter what, we learned a whole lot about the market as is, and challenge is that sometimes there's just not much meat on the bone, and you're gonna run into those deals. But nonetheless, sometimes it's still worth taking the time to work with the broker, build a relationship, and learn the area. So I think that no matter what, you're still walking away with some value in the region.
And let's talk about the lawn care rush. When we pulled into the first property, you see these big clumps of grass all over the
You saw them
sidewalks.
pull they pulled the garage open, and they flew out on the tractor. They had things
revving it up.
They had this thing going right in front of us, just mowing the lawn.
The bottom line is they're probably cutting the lawn like twice a month, and like, oh, we got a showing, better fire it up. So they actually started doing some lawn care today. It's just very obvious neglect, not running it properly.
They actually, I think they paid this lady to stand outside the leasing office and like wave to us and smile.
And they go, oh, hey Betty, how's it going, Betty?
They staged it like this. It's a friendly community, right?
She was sitting out there with her cup of tea, and she goes, I'm fine, dear, like a British accent. It was like, we're in Kentucky. Where do you get the British accent?
I swear I've seen her in a movie before. We've seen her.
And so she's just sipping on her tea, legs crossed, very proper. Didn't really seem like she belonged. It's okay. Nothing wrong with that. Rashad, what'd you pick up today, man?
Well, on the first deal, like I said, I noticed that they had some bad management. Like Dylan said, every time we go see a unit, they got an eviction. She didn't know, how many units they had. It just, that's one of the worst things I saw, but it's actually good for us because now we know it's room for improvement there. On the second one, like you said, the comp was right across the street. They trying to sell it as, they're using a comp across town when the comp was really across the street that, having less rent. So that was kind of dead from the jump. Yeah. No matter what you do to it, that deal. Yeah. And the third one, when we met with the broker guy, he gave us a lot of information on the market. I think it was very informative what he had to say about Kentucky and everything, and it kind of sparked my interest about Bowling Green a little bit too.
Definitely.
Yeah.
I feel the same. Yeah.